your 20s, 30s, and 40s. These are hands down the most absolutely crucial decades of your entire financial life. I mean, the decisions you make right now, and honestly, the mistakes you manage to avoid, they are going to completely dictate your future. We're talking about the difference between retiring comfortably on your own terms or literally working until you physically cannot anymore. Those are massive stakes. But today, we're going to make sure you end up on the right side of that equation.
Welcome back to The Explainer. I am so pumped to have you here. Today, we're doing something a bit different, and it's highly actionable. We are doing a complete decade-by-decade breakdown of the absolute most common financial mistakes people make and exactly how you can dodge them. Because the ultimate question we're answering here is, will you retire comfortably? Our goal today is to guarantee a resounding yes to that by shining a big spotlight on the financial traps waiting in each phase of your life.
So here's our roadmap for this explainer. We're going to cover the biggest mistakes in your 20s, then move into your 30s, and finally tackle your 40s. Let's just jump right in.
All right, part 1, mistakes in your 20s, the foundation.
And mistake number 1 right out of the gate is waiting to invest simply because you feel like you just don't have enough money yet. But listen to this. Even $50 a month invested starting at age 22 is worth more than $500 a month invested starting at age 40. It's crazy, right? Time is doing all the heavy lifting here. Time is, without a doubt, your absolute biggest asset. You've got to use it. Don't wait around until you magically feel rich enough to start.
Mistake number 2 is a big one. It's lifestyle inflation, especially right after college. Look, getting that first real job with a real paycheck, it's an amazing feeling. You've earned it. But immediately upgrading your entire life, financing a brand new car, signing a lease on a super fancy apartment, or funding expensive daily habits before you've built any sort of safety net, that's a huge trap. You're basically building a financial house of cards.
Then we have mistake number 3, which is ignoring your employer's 401k match. If your company offers a match and you aren't contributing enough to grab all of it, you are quite literally leaving free cash on the table. Just think about that for a second. Where else in life does someone just hand you free money for your future and you say, nah, I'm good? Please do not walk away from this money.
And mistake number 4 for your 20s, treating your credit cards like free extra income. If you're carrying a balance, you could easily be getting hit with an interest rate over 25%. That is wild. A credit card is a tool, not a license to spend money you don't actually have. If you can't pay it off completely every single month, those sky-high interest rates are going to absolutely crush your financial foundation.
Moving right along to part 2, mistakes in your 30s, the complications.
As your income grows, the complications definitely level up. So, mistake number 1 in your 30s is buying way too much house just because the bank approved it. Listen, banks will often approve you for a mortgage that is way larger than what you can actually comfortably afford. Just because you qualify for the maximum loan does not mean you should take it. Here is the golden rule you need. Keep your total housing costs under 28% of your gross income. Stick to that rule and you won't end up house poor.
Mistake number 2 in this decade is letting life get too crazy and just stopping your financial education. It is so easy to do, right? You've got a career, maybe a growing family, obligations are piling up left and right. But the folks who actually win financially are the ones who stay sharp. They keep learning, they constantly adjust their plans as their life evolves, and they just keep building. Your financial plan should never, ever be stuck on complete autopilot.
Now, to avoid the final 2 massive mistakes in your 30s, you absolutely have to lock down a few crucial things. First, if you have a partner, kids, or anyone depending on your income, you need life insurance and a will. It's not morbid, it's just responsible. Second, the stakes are way higher now. A job loss or a surprise medical bill without 3 to 6 months of living expenses saved up in an emergency fund, that can instantly derail everything you've worked so hard to build. You need that safety net.
All right, part 3, mistakes in your 40s, the crunch.
Your 40s are officially crunch time. Retirement is only about 20 years away. Now, I know 20 years might sound like a long time, but anyone in their 40s will tell you it goes by in a flash. So mistake number 1 here is not actually knowing your retirement number. Do you know exactly how much you need to retire? Most people don't have a clue. A super common and helpful benchmark to use is 25 times your annual expenses. So if you plan on spending $50,000 a year in retirement, you need $1.25 million saved. Knowing that exact multiplier gives you a very real, tangible target to aim for.
Now, mistake number 2 is incredibly common and usually very well-intentioned, but it is so costly. It's paying for your kids' college at the direct expense of funding your own retirement. You've got to remember this. Your kids can take out loans for college. You cannot take out a loan for retirement. There's no such thing. You have to secure your own oxygen mask first before assisting others, even your own children.
Mistake number 3 is carrying high-interest debt. We're talking credit cards or high-rate personal loans into your 40s. This is a massive red alert. You've got to eliminate it. The math is really simple, but it is brutal. Every single dollar that you pay toward interest is a dollar that isn't growing for your future. And when you're in your 40s, you absolutely need every one of those dollars working for you, not against you.
Mistake number 4 is failing to diversify. If all of your money is tied up in one single stock, or just one type of account, or one asset class, you are highly exposed. You're taking on totally unnecessary risk right at the time when you should really be protecting your wealth. Diversification is the shield that actually protects you when the market gets choppy.
As we wrap up this explainer, I really want to leave you with this one truth. No matter what decade you're in right now, whether you're 22 or 49, the absolute best time to make smarter financial decisions and take corrective action is right now. Don't get bogged down or paralyzed by past mistakes. Just pick one single thing from this breakdown and act on it this week. Review your 401k, check on that emergency fund, or go calculate your retirement number. Just take action.
So I've got to ask, what's the single biggest financial mistake you've made, or maybe one you totally dodged? I want you to drop your answer down in the comments so we can all learn from each other's experiences. And hey, if you found some value in this breakdown today, please subscribe to the channel and share this explainer with someone in your life who really needs to see it. Until next time, stay focused.